Good evening, friends. We'll start the session in 2 minutes. Let the people join. Just give us 2 minutes, then we will start. Okay, let's start, friends. You guys can hear me and see me. Please type yes. There was a huge issue. I don't know why Zoom was not working at all. Okay, that's why we postponed it for half an hour. So let's start now. Everything is fine now. Okay. Right, great. Okay, so now friends, we have seen the risk management and money management, how we do the risk management and money management. Now what we have to focus on is, we also had the focus on reward to risk ratio. We see what exactly reward to risk ratio mean. Now friends, we have to understand the power of combination of risk management, money management and reward to risk ratio. Okay, when we use all these three in the combination, what is the end result of that? Understand, friends, we have to do the trading based on absolutely our mindset should be the business mindset. We should be able to manage our risk capital and we should also understand the reward to risk ratio. Okay, so what is the power of the combination, friends? Understand, suppose you are an HIT trader. Okay, HIT trader means suppose you are a day trader, intraday trader. Okay, a day trader, ideally, let's say your capital is 1 lakh. This is just an example. Okay, we will discuss the practical things as well, but this on this chart is just an example. Okay, let's say your capital is 1 lakh rupees and 20 trading days in a month. Okay, so suppose there are only 20 trading days in a month and risk per day we have planned 2% of 1 lakh, that is 2000, and risk per trade will be 2000 divided by 4, that is 500. It means what? Why our risk per trade will be 500? Because friends, our risk, we will be taking only 4 trades in a intraday in a single day. Okay, let me show you the calculations here. Let's say our capital is 1 lakh rupees. Okay, and we are planning the 2% risk. Right, so our risk will be 2000 risk for a day. So this 2% is for a day if you are a day trader. Okay, if you are an intraday trader, then your risk per day will be 2%. Okay, but friends, understand these calculations will absolutely change in options trading. We will also guide you about how the calculations will be different in the options trading, that we will see at the end. Okay, at the end of this course, after discussing all the strategies and after discussing the advanced chart trading. Right, now suppose your capital is 1 lakh rupees and your risk is 2000 rupees per day, and you are ready to take, let's say, 4 trades in a day. Okay, if you are ready to take 4 trades in a day, it means 2000 divided by 4, my risk per trade will be 500 rupees. Okay, so this is how we will calculate our risk per trade. Okay, these are just the calculations, just the examples. Practical things will be different. Okay, now, so assuming your accuracy ratio is 50%. Suppose you are just getting the accuracy of 50%, not more than 50%. It means out of the 80 trades, 20 trading days into 4 days, into 4 trades in a day becomes 80 trades. Okay, suppose you are taking the 80 trades. This is not going to happen, friends, that you will get exactly 4 trades every day. Okay, on an average, an intraday trader takes 60 trades in a month. But these are just calculations that we have to discuss. So let's say your accuracy is 50%. It means 40 trades is giving you the target and 40 trades are giving you the loss as well. Okay, so in 40 trades stop loss gets hit, and in 40 trades our target get hits. Right, and our target will be, as per reward to risk, 2:1. It means our reward per trade will be 1000. If our risk per trade is 500, then our reward per trade will be 1000. Okay, so 40 trades into 1000 profit comes to 40,000, and 40 trades 500 rupees loss comes to 20,000. It means then too at an end we are in the profit of 20,000. Okay, can you imagine, friends, 20,000 profit at the capital of 1 lakh rupees becomes 20% ROI, and that too at the accuracy of just 50%. Okay, whenever we will start the trading, obviously our accuracy will be the minimum 50%. Okay, but our intention will be at least to reach at 60%. Right, 60% is the good ratio, right, in any trading career. So let's say if your accuracy becomes 60%, you are trying to focus on additional probability enhancers and you are improving your accuracy. Okay, so your 48 trades will be in the profit and your 32 trades will be in the loss. Okay, so 48 trades, 1000 rupees per trade profit becomes 48,000, and 32 trades in the loss will give you 500 loss each. It means 16,000 loss. Then too you are in a profit of 32,000. Okay, these calculations you have to understand. Suppose you are not able to follow all the rules. Suppose you are doing some mistakes and you are not able to follow the rules and you are getting accuracy of just 35%. Then too you are losing just 2,000. If your accuracy becomes 40%, because initially you will do lots of mistakes that you have to understand. Okay, then too you are at a profit of 6,000. Okay, so understand, friends, this is the power of combination of risk management, money management and reward to risk ratio. These calculations you have to be clear with in your mind before even starting the trading. Okay, but obviously, friends, our intention is that you should at least earn. So my goal for you, for each and every one of you, is to reach at the minimum goal of rupees 1 lakh per month. Okay, this should be per month, friends, and this is the minimum amount, right? Because I feel that this is Indian rupees. Okay, so Indian rupees, 1 lakh rupees per month, ideally you should earn minimum from the trading. This is my goal for each and every one of you. Okay, because I feel that minimum this much amount every family needs for a good decent lifestyle. Okay, not with the 1 lakh capital, obviously not with the 1 lakh capital. Okay, the capital requirement will be little bit more than that. So ultimate goal for you guys so let's say I have a goal for you all guys is 1 lakh rupees. So I will give you the exact calculations about how we will reach at 1 lakh rupees per month goal. Okay, but here you have to understand, friends, this is the table that just I am showing you, that this is the power of combination of risk management, money management and reward to risk ratio. Okay, practical things will be altogether different than this, because in intraday trading we will get the leverage as well. We will get the leverage of 5x, right? In Indian stock market we will get the leverage of 5x even after SEBI margin rules. Okay, but in swing trading spot things will be different. Okay, and here also in options things will be different, because options obviously we have to take trades in lot sizes. Okay, so every calculations I will give you with all the combinations of different capital amounts. Whatever capital amount you have, then this much trading you should do, and this much output could be possible. Okay, yeah, so now I am giving you the calculations for swing trading. Okay, now this is the calculation of swing trading. Suppose assuming 1 lakh capital and 15 best trades in a month. Suppose not 15, let's take it 20 best trades in a month. Okay, to identify 20 best trades is absolutely simple in swing trading. Okay, so 20 best trades in a month, capital is 1 lakh, 2% of 1 lakh, risk will be 2000. If the risk is 2000, then reward will be 4000. Okay, and now suppose you are getting the accuracy of 50%. It means you are taking profit in 10 trades and losing in 10 trades. 10 trades will give you 4000 profit, that is 40,000. 10 trades will give you loss of 2000, that becomes 20,000. Okay, so then too you are in the profit of 20,000, and if your accuracy is 60%, your profit will increase to 32,000. Okay, but let me tell you one thing, friends, we will see so much great probability in answers, due to which your accuracy can even go to 70 to 75%. Okay, but at initial stage, don't have that much expectation from yourself. Have the expectation of 50 to 60% from yourself. Okay, and thereafter definitely you can reach at 70 to 75%. How to trade in Nifty and Bank Nifty intraday? That is possible with the options or with the futures. And with the futures we need a lot of capital, so that's why we will trade in index options. Okay, so about the options, calculations will be different, so we will give you the practical calculations later on. Okay, understand friends, practical calculations are altogether different. So this chart is just to encourage you that even 50 to 60% accuracy is the good accuracy to start your trading career. Okay, and even if let's say after 1 year also your accuracy is just 60%, then too you are at an absolutely great position than most of the traders. Okay, understand friends, don't get demotivated that out of 10 my 4 trades are giving loss, 6 trades are giving profits. Understand the calculations. This is the calculation of a pure business. Okay, with the combination of risk money management and reward to risk ratio. So 60% accuracy is also giving us 32% ROI. But friends, practically in spot market 2% risk is not possible. We ideally be able, with the because of the restriction of the capital, we ideally be able to take a risk of 1%. Okay, so that is also absolutely fine. So we will give you the exact calculations. If you want to do swing trading or if you want to do intraday trading, then what your calculations will be and how much trades in a day, how much trade in options, how much trade in spot. If your capital is about this much amount, then you can take trades in futures as well. So everything will be guided. Okay, as of now, just be focused that even 50 to 60% accuracy is the best accuracy. Okay, I hope this is clear. Is this clear, friends, till now? So this was just to encourage you that yes, 50 to 60% accuracy will also give us the best results. Okay, now exactly. So someone is saying understood the difference of the real RR using the real usage of reward to risk. Okay, now friends, understand, while we will be taking the trades, obviously a lots of emotions will come into the picture. That is certain, that is going to happen. Okay, I will not suggest you something that you should not be having any emotions, but we can definitely do certain things due to which we can manage our emotions. Okay, so how to control your emotions during your professional trading journey. Okay, so you will be starting your journey now. During this journey, how you will protect, how you will control your emotions, or rather than using the control word, I would like to use how you will manage your emotions. Okay, because friends, emotions will come and they has to come. We are the human beings, obviously emotions will come into the picture, but how we can manage them, Let's see that. So if before taking the trade, now how we will manage our emotions before taking any trade. Okay, these 3 points you have to focus, friends, and fourth point also I will tell you. Okay, this fourth point also will be an absolute important one. Okay, that's not in the presentation, I will write that. Now, number one is take calculated risk. You should be always clear in your mindset that whatever risk you are going to take, that will be the calculated risk. Okay, so let's say you have a capital of 50,000. Okay, and you are taking one position, you have taken one position, let's say in Nifty options, suppose. Okay, this is just an example. Let's say Nifty option buying you are doing. Okay, option selling is not possible with 50,000 capital. So let's say you have done Nifty options buying with 2 lots, suppose. Okay, friends, let's say you are taking this position. This will be too much risky position on just 50,000 capital, 2 lots of Nifty options. But if you are okay with 10,000 risk, suppose this thing has 10,000 risk, or it will have around 6,000 risk, suppose. Okay, so if you are fine losing 30% or whatever, let's say 10%, around 10 to 12% of your capital in a single trade, then you can definitely do that. Okay, but the important point here is you are ready to take the calculated risk, right? So let's say whenever the position will be on, you already know that I can lose 6,000 capital in my this trade. Okay, if your risk will be calculated, then emotions will not come into the picture, because without any calculations, if you will directly take the trade, friends, your emotions will be hit. When the trade will be on, you will say, oh my god, 4,000 capital is there and my just capital is just 50,000. But if you have already the calculations that yes, I can lose 6,000 in this trade, then definitely you can take this. Okay, so understand, friends, whatever risk you want to take, you can do that. Okay, suggestible is 2% in each trade or 2% in a day for a day trader. But if you want to take more risk, you can do that, but it should be the calculated one. Okay, you must know the upfront that how much I can lose in this trade. Warren Buffett says, friends, a professional trader, the best trader has already, the best trader always knows that how much I can lose. Okay, a good trader knows that how much I can earn, but the best trader always knows that how much I can lose. Okay, so here you have to be clear that how much you can lose in a single trade. This you must plan upfront. You must know that upfront. Okay, next, have your own capital. This is very powerful, friends. Okay, this, you can say most of the traders are, let's say, are not a successful trader is because of this reason. Friends, you don't have to borrow the money to take the trades. Okay, you never ever have to do the trading with your borrowed capital. You must have your own capital. Even if the capital is too much less, let's say it's 10,000, then too it's fine, friends, to start with the 10,000, but your capital should be your own capital. Okay, you should be absolutely relaxed with your mindset that even if I lose entire capital, then too nothing is going to happen. Okay, lots of people, what they do, friends, Ravi sir has learned, Ravi sir has taught me the trading. Now I am a trader. So directly they will ask someone that you also put 5 lakh rupees and 50-50 profit we will share. Whatever schemes people will tell to other people, friends, you don't have to do that. Okay, you have to practice the trading. You have to build the art of trading. Okay, you should not have any pressure of your capital here. You should be absolutely relaxed from here. Then only you will be able to take the trades. Then only you will be able to manage your emotions. Okay, so here you have to understand, friends, have your own capital no matter what. If you want to start trading after 2 months, that's okay. Okay, you should not borrow money and do the trading. Okay, so this has to be clear. Third, you must train your brain to protect your capital. Okay, you should be absolutely clear here that my goal or my intention, my first intention should not be to earn from the market, but my first intention to protect my capital. It means what? I will be taking only calculated risk, and I know that based on this calculated risk, my capital will be protected. Okay, so let's say you are planning 50,000 capital and 4,000 risk. So you know that yes, even after this 4,000 risk, I can even take trades with 46,000 capital. Okay, if you are confident on a trade, you can take the risk whatever amount you want. You are mature enough, friends, but your intention should be to protect your capital. Okay, it should not like happen that you may lose 50 to 60% of your capital in a single trade and next day you don't have capital to take the trades on. Okay, so this also you have to understand. You must train your mind, brain to protect your capital. Okay, yes, definitely. So you have to exit at your stop loss. So third point results in that exit at the stop loss no matter what. Okay, exit at the stop loss no matter what. Now, fourth point is absolutely important, friends. This you have to understand. Your trading income, okay, your trading income should be a second source of income. Okay, it means what, friends? Your trading income should not be the primary source of income. It means what? Let's say you are in a job and you don't like your job, suppose. Okay, and after learning all the trading and everything, while you will be starting the trading, you don't have to leave your job, friends. Okay, you don't have to leave your primary source of income. Whatever amount you are earning now, whatever your source of income as of now is, be it there, friends. Okay, don't have any pressure on your trading income. Why I am saying this, friends, that your trading income should be second source of income. It should not be primary source of income at the initial stage. Later on you can definitely do that. Now suppose your current income, okay, now suppose your current primary income source is, let's say it's 50,000 a month, suppose. Okay, so if your earning is 50,000 in a month as of now, then until you are not earning the double of this consistently for 3 months, until then you will not make your trading income as a primary income. Okay, friends, understand this. You don't have to leave your job or you don't have to leave your business. You don't have to absolutely rely only on the trading income at the initial phase. Because friends, if you will only rely on the trading income, it means if you will earn from the trading, then only your livelihood will go on. Okay, then only you will be able to fulfill your basic necessities that you don't have to do. Okay, if that will be the case, then you will have a lot of pressure here. Okay, trading should be done, friends, absolutely with a relaxed mind, with the own capital and no pressure, no burden on the trading income initial stages. Okay, at the initial stage, friends, until you are not earning the double amount of your current income at least consistently for 3 months, and that too with your own trading decisions. It should not happen that Ravi sir has given me the trades and I took the trades and I started earning double of my income for 3 months. Then you should not be avoiding that same case. Okay, you should be earning absolutely with your own trading decisions. Okay, this is how you will be able to manage your emotions, friends. Okay, so your trading income should be the relaxed type of income. You should not have any burden on your trading income. Okay, this should be absolutely clear, friends. Right? Now, during the trades, how we will manage the emotions. First of all, put your target order and stop loss order and don't keep watching your position. Okay, at the initial stages, friends, you don't have to keep watching your positions. let's say the market will come up and you will feel like, yes, it's coming up, I am into the profits. And if it will fall a bit, again the emotions will come, oh no, it's whether my stop loss will not get hit or my profits is going. Okay, you don't have to keep watching your positions. Okay, you watch your emotions while you are taking the trades. Okay, if you think that too much emotions are coming into the picture while the trade is on, then stop watching that trade. Okay, put the target and stop loss order and forget about the trade. One of these orders will automatically be triggered. Okay, I hope this is clear. Right now, after entering the trade, never ever analyze the trade. This is very important, friends. Okay, this is absolutely important. Lots of people do this, that once you have taken the trade, then they will say that, oh, there was that one rule I missed out at. Okay, you don't have to analyze the trade. You don't have to think of the trade itself. Once you have taken the trade, once you have entered into the trade, forget about analysis. It means what? Whatever rules you have to apply, whatever analysis you have to do, whatever, let's say you want to see the global market, even though we don't suggest that, okay, but suppose you want to see the global market, the results or anything, okay, you have missed one part of your analysis, that's okay. You have missed to follow the one rule, that's okay. Once you have entered into the trade, you are not supposed to analyze that trade. Once it's done, it's done. Once you have entered, then there should be only two outputs, either stop loss or target. Nothing should be in between. Even if you have missed out on any rule, then too it's fine. Okay, don't exit your trade in the middle. Right? So let's say you have bought here. Okay, and now the market is falling and you saw that, oh no, there was a supply zone. Okay, there was a higher time frame supply zone. I didn't saw that. Okay, suppose you feel that. So then, friends, keep let the stop loss be hit if the market wants to come down. You don't have to analyze here that here it's a supply zone. Okay, you don't have to analyze that. Once you have taken the trade, that's it. It's done. Okay. If the trade does not get entry, then obviously you can change it any times. Okay, you can change your entry, stop loss, you can check again the rules, whatever you want to do. But once you have got the entry in the trade, then you don't have to analyze that trade. Okay. Now, after taking the trade, there are few certain points, friends, where we have to manage our emotions even after taking the trades. Okay. Now, how we will manage the emotions after the trades? Take rest for few days if you are continuously making losses for few days. Okay. So, let's say continuously 2 to 3 days you have lost. Okay, take rest, friends. Take rest for at least 2 days. Keep yourself away from the market, or take rest at least for 1 day. Okay, because the emotions will come into the picture. You will feel demotivated. Okay, you will feel restless. Then you don't have to take the trades, friends. Okay, you don't have any pressure on yourself on the trading income, because your capital is owned and you have already a primary source of income other than the trading income. So you don't have any pressure on your trading income. Okay, so if you are making continuously 2 to 3 days losses, then you are not supposed to take the trade for 2 to 3 days. Okay, or 1 to 2 days, right? And also take rest for at least a day if you are continuously making profits for few days. Yes, friends, if you will continuously make the profits, let's say continuously 3 days, 4 days or 5 days, you have made the profits, continuous 5 days you have made the profits, then also you should take rest for at least a day. Why? Because there might happen that you become a bit overconfident, due to which you might get one big loss from the market. Okay, or you might be let's say avoid 1 or 2 rule. You will be overconfident, saying that however I am saying market is going like that only. Okay, you will feel like a king of the market. No, friends, we have to always respect the market. Okay, so if you are continuously making profits and you are watching your emotions, that you are feeling now high, a bit confident or a bit overconfident, then you should take rest at least for a day. Don't take trades for a single day. Okay, exactly correct. Or celebrate right? So let's say continuously 5 days you made the profit, then take rest and celebrate that day. You can do that as well. Okay, don't even watch the market for that day. Okay, I take lots of times the rest when I feel like. Okay, when I eventually when I get the big profits, I most of the times I take rest for the next day. Okay, whenever I get the big profit, I take rest next day. Okay, because the emotions, we are humans, lots of emotions comes into the picture. Okay, you have to understand this game, friends. This game is law of average. This game is of calculations. Okay, so this is what I am explaining to you. Okay, is this clear till now? Is this clear till now? Yes, absolutely. Clear, great, very much. Okay, great. Now friends, let's see, before taking any trades, how we will plan our trades. Okay, so whatever we have learned till now, risk management, money management, emotions management, reward to risk ratio, success ratio, everything. Okay, everything put together, we now have to plan our trade before taking any trade. Okay, even before taking any trade, we have to plan our trade with this 5-step process. Okay, you already know this process, friends. Let's see this. Now, number 1 is calculate your risk per trade. You have to absolutely calculate your risk per trade. Let's say your capital is 1 lakh again, and you want to take a risk of 2%, and you are a swing trader, then your risk per trade will be 2000. Okay, so you already notice that whatever trade I will be planning now, in that trade I have a risk of 2000 rupees. I have a risk of losing 2% of my capital. Okay, then you will find out your entry point, that will come from strategy. Then you will find out your stop loss point, again that will come from your strategy. Okay, now this strategy can be based, can be a breakout strategy, or it can be a retracement strategy. We will see both type of strategies. Okay, so no matter what the strategy is, a breakout or a retracement strategy, both the strategies will give us entry and stop loss point. Okay, so we will identify the entry and stop loss point, and based on this, suppose the difference between the entry and the stop loss point is 50 points. Okay, it means our risk as per our strategy is 50 points behind each share, behind single share, suppose. Okay, then we have to calculate our position size. How we will calculate the position size? We are ready to take the risk of 2000 rupees. Okay, and risk as per our strategy is 50 rupees behind single share, right? So let's say 2000 divided by 50 points will come to 40 shares. Okay, it means we will take the trade in 40 shares, friends, right? So what will be our position size? Our position size will be 40 shares. But friends, in swing trading spot market, this is not possible to take 40 shares, because our capital will be less than the required capital behind 40 shares. Okay, so ideally in spot market swing trading, we will keep our risk to 1%, not the 2%. So we will give you the exact calculations, and obviously in options buying, our risk will be more than 2%, much more than 2%. Okay, so that also we will plan, friends, right? We will guide you about that. So if the tragedy happens or anything happens, friends, we will guide you about how to manage these all things. Okay, now then we will be calculating our target point. Okay, now suppose we were ready to take a risk of 50 points. Okay, so 50 points risk was there. My target will be double to this. Okay, it means my RR is suppose 2:1. Suppose my RR is 2:1. I am planning an RR of 2:1. Then 50 points into 2, my target will be 100 points. Okay, so suppose as per my strategy, the entry point was 17,000, 17,000, then my target point will be 17,100. and my stop loss will be obviously 16,950. Okay, 16,950 will be my stop loss. Entry was 17,000, then target will be 17,100. Okay, but let me tell you something here. I hope this is clear, friends. So this is the 5-step process, everything put together. Okay, whatever we have understood till now, risk management and money management. Okay, now suppose your entry point was 17,000. Okay, and your stop loss was 16,950. 50 points risk. Then my target will be 100 points. Okay, so my target will be 17,100. Okay, so this is my target. Okay, and this is my entry point. This is my stop loss point. Okay, now friends, understand. So this is as per reward to risk 2:1. So whatever the target is, 2:1 target it is. Okay, now friends, understand. Suppose you want to increase your reward to risk ratio, and let's say you want to plan it the target as per 3:1. Then your target will be, friends, 17,150. Okay, this we can understand, easy calculations. Okay, 17,100 plus 50 points more. So reward to risk ratio will be 3:1. Now friends, understand, if you are planning a target based on reward to risk 3:1, then also you have to do the basic trailing stop loss. Okay, we will learn the advanced trailing stop loss as well, right? So this is the basic trailing of an stop loss. Let's say you have bought here, you are into the buy trade now, and price starts coming here. Now as soon as the price will come at target 1, which is based on reward to risk 2:1, immediately you will trail your stop loss to the entry. Okay, so previously your stop loss was 16,950. Then once the price will reach at 17,100, means at target 1, means at reward to risk 2:1, immediately we will trail our stop loss to 17,000. Okay, so I will trail my stop loss to 17,000. Now my stop loss will be 17,000. So either I will get the reward to risk 3:1 target, or I will be at least I will not be losing in this trade. Okay, so once you have got the reward to risk 2:1 in any trade, it means you caught this movement, then you should not lose in that trade. Okay, so your stop loss will be trailed to 17,000, and you can hold on for the target 2, and let's say as soon as you achieve the target 2, you can exit from the position. Okay, till now most of the times I, friends, exit 50% position at 2:1 and 50% position at 3:1. Rarely, friends, I do the trailing of 25% of my position. Okay, so n number of times the trailing, the advanced trailing, I always do only with the 25% of my position, because my quantities are huge, really huge. Okay, so this I will guide you about the advanced trailing stop loss once we will understand the follow the footprint strategy. Okay, should we apply this trailing in the GTT? That also we will guide you. Okay, when to enter the trade, take positions with the strategies. When it will be taught, it will be taught now itself. So today we will give you the time frames and everything. Okay, tomorrow we will have the strategies. So Tuesday you can take the trades, friends. Right? Let's start, friends. So this is 5-step process before taking any trade. These points are really important, friends, before taking any trade. Okay, now so now let's start with the strategies. Okay, right. So now, friends, understand, we will be starting the breakout strategies now. Okay, so the breakout strategies we will explain you first. We will see all the breakout strategies. We will see all the practical things. Then we will start with the follow the footprint strategy, that is a retracement strategy. Okay, then with the combination we will see the advanced chart reading. Now first of all, question comes, what is a breakout? Okay, now suppose, friends, let's say you think that this is the resistance, a straight line resistance. Okay, so ideally whenever the price will come here, ideally our thought process is that the price should fall from here. Okay, it should resist it from here. Okay, so because this is the resistance line, but suppose price is not resisting here and price gives the breakout. Okay, it means price comes beyond this resistance, so there are high chances that the price will continue this trend. It will come one-sided up. There are high chances for that. Okay, so if the price breaking a resistance, that is called a breakout, or similarly if the price, let's say, breaking a support, this is also called the breakout. Okay, so ideally friends, we will call this as a breakdown and this as a breakout. Okay, so the general word for both of them is breakout, but obviously this is breaking down, so we will call this as a breakdown and we will call this as a breakout. So if the price breaks the resistance line, we will say that the breakout has happened. If the price breaks the support line, we will definitely say that the breakdown has happened. Okay, so the general terminology of a breakout, let's see this. A breakout is a stock price moving outside a defined support or resistance level with increased volume. Okay, so this is inbuilt in the definition itself, friends, that whenever the breakout should happen, it should happen with the increased volume. Okay, so let's say price is moving and making this trend line, right, and we are waiting for the price to give a breakout. Let's say whenever it gives breakout, at that time the volume should be increased. Okay, this is inbuilt with the definition itself, friends, that whenever the breakout happens, it should happen with the increased volume. Okay, volume is an indicator, we already know that. If you have no knowledge about the volume, please watch that video of the volume. Okay, now what is false breakout? So breakout we know now, but what is false breakout? A false breakout occurs when a price moves through an identified level of support or resistance but does not have enough momentum to maintain its direction. Okay, so let's say whenever the price gives a breakout. Okay, so let's say again, let's take a simple example of a trend line, right, and whenever the, let's say, price comes here and gives a breakout. Okay, so if the price is giving a breakout but the momentum is not strong enough that the price starts falling from here itself, so this breakout is converted into a false breakout. Okay, so the price gave breakout but the momentum was not strong enough that the price must come up, but it started falling again. So that is called the false breakout, friends. And how we will protect ourselves from false breakout, that also we will see. Okay, first of all, how we will identify the false breakout upfront. Okay, so there are two methods to that, how we will identify the false breakout upfront. Let's say whenever the price has closed above the trend line, okay, or any resistance line or any support line, suppose, but there is an opposite response from the sellers. Suppose a breakout is happening. Okay, suppose breakout has happened but there is an opposite response of seller, right? It means that results into the higher wick, the more wick, which results into a big wick. So this is the big wick that resulted because of selling pressure. Okay, it indicates the probability of false breakout. Yes, friends, so there is a high probability that it might convert itself to a false breakout. Okay, so ideally this is the breakout, right? But if there is a big wick opposite side, because of the selling pressure, it might get converted into the false breakout. Okay, so this is how we can identify the probability of a false breakout upfront. Okay, what is the another method? What is the another method to identify a false breakout? Let's see that. Suppose again market is falling, okay, and let's say it gives the breakout here, but near this breakout there is a higher time frame supply zone. Okay, so if there will be a higher time frame supply zone near the breakout's candles close, then there are high chances that this breakout will convert into a false breakout. Okay, so this we have to absolutely be clear with, right, that this can definitely convert into a false breakout. So we can, this is how we can identify upfront the false breakout, the probability of the false breakout. Okay, now increase your probability. What I mean about increase your probability, with any type of breakout strategies, the price that halts before the breakout. Okay, so let's say the breakout is about to happen, suppose, and the price halts here. Suppose the price is halting here, there is high chances that this breakout will be a powerful breakout. Okay, there are huge chances behind that. Turns out to be one of the best breakouts. Okay, you will identify such breakouts as one of the best breakouts ever that you have identified. Okay, if the price is halting before giving the breakout. Okay, this concept, friends, we will be using a lot of times in advanced chart reading. Okay, so you have to understand this concept. Now there is one more thing due to which we can identify the best breakouts. How we can identify that? Suppose again, let's take the same example. Let's say the market is falling and here the breakout is about to happen. So let's say like this, right? And suppose here is an institution's buying zone. Okay, what is here? Here is an institution's buying zone, suppose, right? And price is reacting from the institution's buying zone and about to give a breakout, right? And it gives breakout, suppose. Friends, understand this type of breakouts will also be absolutely powerful for us. Okay, so there is a higher time frame demand zone just before the breakout and price is reacting from the powerful higher time frame demand zone. If the price is reacting from the higher time frame demand zone and is about to give breakout, there are high chances that this breakout will also convert into the powerful breakout. Okay, so we will be identifying, friends, such type of breakouts as well. This is how we will be able to identify the powerful breakouts. And once we will be able to identify the powerful breakouts, we will get big profits from the market. Okay, what is lower time frame, what is higher time frame, everything we will guide you. Same, yes, same case with the supply zone as well. Okay, now suppose that market was moving up, or let's say, okay, like this, and this is the trend line. Let me draw it a greater way. Right, suppose this is the trend line. Okay, and market is about to give the breakdown and here it's an institution supply zone, suppose. Okay, and price is reacting from institution supply zone and it's about to give the breakdown. This type of breakdowns will be the powerful breakdowns. Why? Because the price is traveling, is coming from the higher time frame supply zone. Now you will say, sir, what is higher time frame? I will guide you that. Okay, so if the price is reacting from higher time frame supply zone, this will give us the powerful breakdowns. Okay, so this is how we can identify, we can increase our probability in the breakout trades. Okay, is this clear? No, we will not take the trade at lower time frame supply zone. We will not see the lower time frame. We will see the higher time frames only. Clear? Okay. Now, friends, understand about the time frames for breakout strategies. Okay, I will be giving you now the time frames for breakout strategies, and these time frames are different for the different type of trades and for the different markets. But friends, understand, whatever time frame I am giving you now, these are only for the breakout strategies. Please don't use these time frames for follow the footprint strategy. Follow the footprint strategy will have altogether a different time frames. Okay, now time frames for breakout strategies. First time frame, let's see, of the Indian stock market. Okay, so the time frames for different trade types for Indian stock market in the breakout trades, only and only for the breakout trades I am talking about. Okay, so if your purpose is intraday and your trade type is HIT, if you have don't knowledge about the HIT, DIT, WIT and MIT trades, then watch that video, friends, in the beginners module. Okay, and then you will be able to identify this, right? So let's continue now. Suppose your trade type is HIT, then your lower time frame will be 10 minutes chart or 15 minutes chart. Okay, and your higher time frame will be 1 hour chart or 75 minutes chart. Okay, now why we are using 75 minutes chart here? There is a big reason behind this, friends. Suppose we are using the Indian stock market, and Indian stock market works from 19:15 AM to 3:30 PM. Okay, so how much time frame it is? It is 6 hours 15 minutes, right? So our time frame is 6 hours and 15 minutes. Now friends, understand it. Suppose we are seeing the 1 hour chart, and there are, let's say, these 4 candles, and then this 5th candle, and then this 6th candle, and then this 7th candle. Okay, so let's say we have these 7 candles in 1 hour time frame. Okay, of a specific day, let's say of 12th November. Suppose this is the 12th November chart, and this is what we have in the 1 hour time frame. Friends, understand, the market is working for 6 hours 15 minutes, and this is 1 hour chart, and in 1 hour chart, how many candles are there? 1, 2, 3, 4, 5, 6 and 7. Okay, so how this is possible? 7 candles in 1 hour chart is because, friends, understand, this last candle of this last 7th candle is of 15 minutes. Okay, all these candles 1, 2, 3, 4, 5, 6, all these candles are equal candles of 1 hour, but this last candle is just of 15 minutes. Okay, so friends, understand, we have to be absolutely clear here that if we are using 1 hour chart in Indian stock market or in DIT trade also in lower time frame, if we are using 1 hour chart, we have to be absolutely clear that last 15-minute candle should not give the breakout. Okay, it means if the breakout candle is the last 7th candle on Indian stock market DIT trade type, then that trade will be wrong. We will not take that trade. Okay, so you have to clear with this, because 75 minutes chart is available only in the paid version of TradingView website. Okay, and 75 minutes chart gives us equal candles, equal 5 candles in the Indian stock market. Okay, so that is why it's suggestible, rather than 1 hour, it will be best if you can use 75 minutes chart. But initially you will not do that, because initially you don't have to invest on the tools. Once you will be profitable from the profits, you can reinvest the amount in the TradingView website, the tools. Okay, now, so DIT trade type, the time frame will be 1 hour 75 minutes chart, and higher time frame will be daily chart. WIT, lower will be daily chart, higher time frame will be weekly chart. MIT trade types, lower time frame will be weekly chart, and higher time frame will be monthly chart. This PDF we will upload in your Teachable account. Okay, so don't worry about this. This PDF is available for download as well to you. Okay, now another is time frames for different trade types for commodity market. Okay, now what is this commodity market? MCX, right? In the Indian market itself, the MCX is the exchange through which we can trade in the commodity market. So that works for around 14 hours. Okay, so the time frames for that is, if you are an intraday trader, HIT trade type, then your lower time frame is 15 minutes chart, and higher time frame is 1 hour or 2 hour chart. Okay, and if you are a DIT trader, then your lower time frame will be 1 hour or 2 hour chart, and higher time frame will be daily chart. Okay, here if you are a WIT trader, your lower time frame will be daily chart and weekly chart, higher time frame. MIT, weekly and monthly. Okay, so these time frames are same as in the Indian stock market, same in the commodity market as well. Okay, but here the time frames are different, right? So these time frames are for the commodity market. What about the forex or cryptocurrency? So both works for 24 hours. Okay, so that's why the time frames for both of them are intraday HIT trade type lower time frame will be 15 minutes or 30 minutes chart. Sometimes you can trade in 15 minutes, sometimes you can also trade in 30 minutes chart. Okay, and higher time frame will be 2 hours or 4 hours chart. Okay, so this is higher time frame, and here DIT trade type, lower time frame will be 2 hours or 4 hours chart, higher time frame will be daily chart. WIT trade, lower time frame will be daily, higher will be weekly, and MIT trades, lower will be weekly and higher will be monthly. Okay, so these are the three different time frames for the 4 different markets. Okay, the time frames are same for forex market and cryptocurrencies. We will share this PDF to you. You can download this and can definitely print out and have it on your trading desk. Okay, I hope I am clear with this, right? So if we are using 2 hour time frame, it means we are getting 12 equal candles. If we are using 4 hour chart, it means we are getting 6 equal candles. Okay, there is some difference in the commodity market, so the solution behind this also we will give it to you. Okay, 5 minutes HIT, we will not be using 5 minutes time frame. Okay, so here friends, 5 minutes time frame is not allowed in the lower time frame. Why friends? Because in the breakout strategies, 5 minutes time frame you can get a huge number of breakouts and lots of stop losses can be triggered just because of usage of such a lower time frame of 5 minutes. Okay, so in the breakout strategies we will not use the 5 minutes time frame, but yes, in the retracement strategy, follow the footprint strategy, we can use 5 minutes chart as well. Okay, but here it's not possible friends. You should not use that. That will confuse you, or it might happen that lots of stop losses are getting triggered. Okay, but let's say you might say that sir, using 15 minutes chart will be a too delay for us. We might miss out on the opportunity. Okay, and you also don't have the TradingView website, suppose the paid version of TradingView. Okay, so what's the solution? We will give you one session in which you can merge 2 5 minutes candle. Okay, so how you will merge 2 5 minutes candle just to get the result of 10 minutes candle, that also we will explain you. Okay, that also, futures and options also we will see friends. First let's finish the strategies. Too much noise in the 5 minutes, yes. How to merge 2 or more candles, that also we will explain you on the day when we will explain you the invisible candle. With that we will also explain you how to merge 2 or more candles. Okay, we will guide you about that, how to merge 2 or more candles. Okay, when we will get this course content PDF, that also we will give you friends. That also it will be available for you to download. Okay, is this clear? Awesome. What will happen in case SL, let's say in case of price opening directly beyond the SL point? Okay, so let's say your stop loss is here. Okay, and one day before price closes here, next day directly it opens here. Okay, so you will obviously be having more than 2% risk here. Okay, so your risk will be more than 2%. Okay, that's fine friends. If this is happening, this is absolutely fine. You have to accept that there might get few trades in which your stop loss will be even more than 2% because of the gaps against you. But friends, let me tell you one thing. We will be using the super advanced price action concept, due to which 90% of the times gaps will be in our favor. Okay, so let's say you have a target here. Okay, your target is here, but next day directly it opens here. So you have an additional profit here. Okay, so this additional profit and sometimes this additional stop losses will automatically be knocked off. So all will be averaged out during the month. So that you have to accept. You can't change anything about this. Okay, you have to accept that. The swing traders have to accept this, that sometimes, very few times, gaps can be against us, but most of the times it will be in favor to us. Okay, so is this clear, friends? So tomorrow we will discuss directly the strategy, okay, and then we will start taking trades. Yes, definitely when to use lower time frame and everything, it will be discussed tomorrow. So out of these 7 rules, 5 rules are in the lower time frame and 2 rules are in the higher time frame. So I have just explained you the time frames now. Everything will be explained tomorrow about the breakout strategies and everything. Okay, fine, friends. Definitely. So we will also everything show you on charts as well. Okay, if you have downloaded the app, that's great, friends. Do give us the reviews on Play Store, the genuine reviews, and we will give you the access on 20th November or before that. Okay. Yes, I have read each and every review. Okay, I have read each and every reviews of you guys. Thank you so much for such a positive reviews. I really feel blessed to have such a great members, a great team like you. Okay, I am blessed to have you, each and every one of you, friends. It really feels good while I take these sessions, while I talk with you. It really feel good, and I have read all the comments, by the way. Thank you so much, friends. Nifty analysis we will give you by the night. Thank you so much. I am also blessed to have such a wonderful team like you. I hope and I really pray that you will become a great trader in your career and your life will be a good, luxurious life ahead. I really pray and I really hope and I have expectations from you guys about this. Okay, so goodbye, friends. We'll meet again tomorrow. Goodbye. Take care. Bye.
किसी ने यहाँ जाके पेमेंट कर दी।
हाँ?
यहाँ जाके 800 की पेमेंट की।
हाँ, ठीक है ना, किसने किया?
एक अभी किसी ने साथ में किया किसी ने।
हाँ, करने दो ना, आने दो।